Okay, well, welcome to the first stream. Well, that isn't really a stream actually. This is a recording um, of Mr. Businessman. This is a new YouTube channel. I'm just going to give you a bit of sort of background to what this is about before we actually get on. Give you a little bit of information about me and what I'm going to be doing over the next, well, foreseeable future. And then, yeah, we'll get on with it. All right. So today we're going to be talking about cash flow. The reason we're going to be talking about cash flow today is because I've actually already done this session once with my students previously. So we did it the other day on Microsoft Teams, and Microsoft Teams is really good. But the negative thing about it is you can only have, I think, about 180 people in one time, unless you want to pay for a really crazy amount of like a business account or something like that, which we don't have access to. So I thought, instead of doing that, as there's a hell of a lot of students out there who are currently at home, currently still going to be studying for A levels and BTECs and stuff like that, who could probably do with a bit of help right now, and teachers aren't necessarily as techie as I am. I thought I would get in touch with you all and give you the chance to sort of go through the spec with me. Now we're up to cash flow, which means that marketing is left to do. So we're gonna sort of do it. So we're gonna start with cash flow. We're gonna go all the way through marketing, and then we're gonna go back to ourselves, and we're gonna start from right at the start of the A level spec. And we're going to go from there. So, yeah, welcome to Mr. Businessman. This is going to be every weekday, 10 to 11, for an hour, live stream. As I said, it's not going to be like this because this one's recorded. As you can see, it's night time. I don't know if you can tell if the lighting's very good. But yeah, it's going to be 10 to 11 in the morning. We're going to go on, and it'll give you the opportunity to ask questions and stuff like that. Not specifically just for my students, by the way. So if you know anyone else who's at home at the minute, who's who's a business owner perhaps, and wants to know a little bit more about business, we're going to be covering quite a lot of stuff. First year stuff first. As I said, we'll have a look at the second year stuff if we get to it. Fingers crossed, the sort of isolation stuff that we're currently doing gets sorted before then. So if that's the case, then there'll be no need to continue on with this, and we'll be able to go back to normal. But you never know; it might go really well, and it's a good resource to have anyway. And you can come back to it. You can always check it. So. That's basically the premise of it anyway. So, yeah, bit about me. I'm Mr. Businessman. I'm I can from the northwest of England, as you can tell probably by my accent. Currently, my credentials are got a first class business degree, but I've also worked at two of the most highly achieving colleges, FE colleges in the UK. So that's pretty good, isn't it? So you're getting quality. So yeah, so it's just to make sure you know who I am and that. Nice bit of advertising as well. We're going to be doing about marketing in the next couple of lessons time, but nice bit of marketing today. I'm not sponsored by Marvel or anything like that. Just happen to be wearing a t-shirt with them on. Okay, so I'm going to be giving you the opportunity to ask questions. If you do during a live stream, please just pop them on. Send me messages, send me emails, something like that, whatever you want. You want me to send me emails because I haven't given my email address, and I'm not going to. But my students, please, get in touch with me. You've got work to do, so keep on doing with that. But if anybody else is watching and interested, then please, comment stuff like that, and we can get back to it. If there's anything you want me to talk about specifically, go into more detail about, no problem at all. Yeah, okay, so this first video might be a little bit choppy and changing. I'm still getting used to the way this works. Sort of set it up, as I said, about a week ago. Less than a week ago, I was still in class, and everything hadn't been shut down. So, it's still going to we're probably going to get better together as we go. But ultimately, yeah, we're going to start with cash flow. Now, another thing about the PowerPoints we're using is the PowerPoints are stuff that we would use in class, all right, which is great because they're obviously pre-made up so that we can use them. But ultimately, the issue with that is there is like a workbook that goes along with these. For my students who are watching, fantastic. There's no problem for you if you want to go back, use these revision notes and that. We've already been through the stuff, and we will continue to do that. Use your booklets as we go. But if you're not one of my students, and you don't have the workbook that goes alongside this, some of the bits might seem a bit weird, but I'll try my best to try and explain them as we go, so you wouldn't really need the booklet, so you would still be able to gain something from it even if you haven't used the booklet. Okay, I hope that makes sense. As I said, I'm not going to jabber on too much longer. I'm just going to get on with it. Okay, because we've got I'm going to try and get this done quite quickly, this one, because I said time's getting on. This is the night before the first stream, if that makes sense. So we're going to get straight on with it. So welcome to my back room, by the way. I hope you like the decor. As you can see, big Doctor Who fan behind me. Okay, so we're going to get on with it. Anyway, so we're going to start off with cash flow, and we're going to go from there. Okay, so welcome to the first Mr. Businessman. Yeah. So, as you can see, I'm going to be in this little box from now on, which is very nice, and we're gonna go from here. Okay, so cash flow. What is cash flow? So, first of all, the one thing that we would do in class is we'd talk about all about the different things that you do in your life. So, what do you pay for on an average day? Do you pay for transport? Do you pay for food? Do you pay for, CDs, downloads, and that kind of thing? Chocolate, clothes. What are your daily expenses, essentially? So what we need to do is understand that to be able to confidently run a business, you have to have access to cash. And it's one of the most dangerous bits of being a business, really, is the cash flow issues that we come into contact with. And one of the first things that you find when you start studying business, and if you're a business owner yourself, you'll know this, is the fact that cash flow is one of the biggest issues that we find ourselves dealing with day to day. Okay, so we did a little thing in class where we sort of looked at a few different things, add and subtract things, how much money do you have here, how much money do you have there. But these are the things we're going to look at, and all right, and I'll keep referring back to the spec. Explain what is meant by cash flow, explain what is meant by cash flow forecast, construct, calculate, interpret cash flow forecasts, evaluate the impact of a cash flow forecast on a business and its stakeholders. Big one, we're going to be talking about stakeholders a hell of a lot. We're going to keep coming back to those stakeholders. So if you don't know your stakeholders, you're damn sure you're going to know them by the time we finish with this. Explain the causes of cash flow problems, explain the strategies a business can use to improve cash flow, and explain the benefits and limitations of cash flow forecasts. So there's quite a lot to get through. Okay, so I'm going to try and do it at pace. And the benefit to you guys is obviously when we're doing a live stream, you'll be able to ask questions. But for you guys, you can just go back, and if I go over something too fast, that's totally fine. Just go back and you can use it for revision. All right, so let's get on with it. So first thing that we have to understand about cash flow forecast is the idea that cash is king. You might have heard this before when you're talking about business. Is the fact is cash is the most important. Now, students constantly get this wrong in exams. They get it wrong in exam prep. They get it wrong in class. Remember, the best time to make mistakes is in class, but ultimately what we've got to remember is cash is not profit. Profit is not money. Money is not whatever else you want to call it, dollars or yen or whatever it is you want to call it. You've got to differentiate and understand the specifics of the words that you're using, okay? So cash flow, cash and profit are not the same thing, and the most important thing to understand is basically to differentiate between the two, okay? So let's just have a look. It says a cash flow forecast statement shows the expected flows of cash in and out of a business over a trading period for the immediate future, i.e. 6 months or a year. It's important. Yeah, you can do them shorter if you want, no longer, because it becomes less and less. We know this about it, don't we? That the more time goes on, the more difficult it becomes to accurately predict the future. So 6 months to a year is more reasonable. You can do them more often, but it starts to become a little bit more laborious and it starts taking time up. You've got to think about the opportunity cost of doing that. A cash flow forecast is made up of 3 parts. We've got revenues. Remember, revenue is not the same as cash. It's not the same as profit. It's not the same as money. We hate the word money. We don't use the word money because that's not what we mean. We mean revenue. We mean profit. We mean cash. What it is you're actually talking about should dictate the word that you use. Remember that. Keep telling yourself that. Kick yourself if you say money. Expenses and balance. Okay. Now, they're basically into three parts. It'll make more sense when I show you in a second. But you've got your revenues at the top. You've got your so it's basically incoming, outgoing, and your balance. Okay. So as I said, it'll make more sense when I show you in a couple of seconds. Okay. Let me show you this. So first of all, cash. Now, I keep going on about cash. Cash is the physical money that flows in and out of a business. So it's income and expenditure. Remember, expenditure, it's got the word spend in it. Expenditure, so you can remember it really easily. Okay? Now, cash flow is the timing of cash coming in and out of the business. It's okay if money's coming in. It's okay if money's going out. But ultimately, you need to be able to plan for things, essentially. Like, if we'd have been able to plan more effectively for this virus shutdown that we're currently on, then you wouldn't see so many businesses freaking out now about having no money. But they are all freaking out, and the government's freaking out, and we're freaking out because we're thinking, well, yeah, okay, you might own your own house, you might have £250,000 house, you might have a £30,000 car, you might have a second home, you might have really expensive stuff, you might have a MacBook, you might have all these different things, but it's all your money is tied up in assets. So in real terms, you've actually got nothing, haven't you? Because you've not actually got usable cash. That's the main issue that we find here. So cash is the physical money that flows in and out of a business. Okay, it's important to understand that. So it's the physical cash, physical money that comes in and out of the business. All right, it's not tied up in stock or anything like that. It's literally the money that sort of flows. That's why we refer to it as a liquid, because it flows in and out. All right. Now, the cash flow is the timing of the cash coming in and out, and cash is paid. The cash is only shown in the forecast at the time the cash is due to be received or paid. Really important to remember that. Okay. So if you say to me, right, I've just sold a £1,000 watch. You're a watch shop. You've sold £1,000 watch, but you've been giving it to the customer on a 6-month credit. In real terms, you've not got that money then, have you? You will have that money in 6 months. Now, on a cash flow, we assume the money is going to come in. And yes, we could have bad debts, and we will go into more depth with them later on. But we're assuming the good debts, okay? Because we wouldn't reasonably give finance to someone if we didn't really believe that they were going to give us the money back, would we? So keep that in mind, okay? We always assume the good debts because we've done due diligence and made sure we understand what we're talking about. Now, the cash flow forecast is the prediction of inflows and outflows of a cash for a business over a certain period of time. Now, the important thing to remember here is forecast, because what we're talking about is predicting the future of money going in and out of the business, and how that will affect us. So let's have a look at. I'll show you in a second how it really works in sort of when we do a cash flow forecast, how it physically works. But think about it. There will be times of the year when you are have more money and less money. So there will be a seasonality to whatever you do, you personally, but also businesses as well. So keep that in mind when we're talking about this, because it's so important to cash flow and the premise of cash flow. Okay, so why is cash so important? So we refer to it as the lifeblood of the business, and it's, as I said, today we are, and this won't translate well, hopefully in the future, but hopefully this all blows over on you, and we go, what was coronavirus and that? But at this moment in time, we are all quarantined. We're all down. They've not shut the whole thing down yet. So if they do go on to shut, if I'm talking to you in the future and you know what happens, hopefully we're not all dead, and hopefully, hopefully they haven't quarantined us, and we're all like in a movie, and we're all up against the window like that. I forget my original point now. Oh yeah, we're talking about lifeblood, wasn't I? So a business could not survive without good cash flow. So enough coming in and going out to be able to pay its debts and things like that. So think about it like this, right? If you're a business and you need to be able to pay bills, you need good cash flow. You need money coming in. But you also need enough money to be able to pay what you need today, and you also need enough money maybe at the end of the week to be able to pay the bills at the end of the week. You don't need £1 million today unless there is £1 million bill today. If you can, if there's, you might need £1 million over the next 6 years. In which case, just make sure you have enough in your account to be able to pay the people on time. It's really important that you can destroy relationships, stakeholder influence, and things like that, which we will come back to. So a business can manage its cash. That will be able to manage its cash. We'll be able to do a couple of things. First of all, it'll be able to invest in the business. Really important. Okay, we can use past profit. We can use physical cash to be able to invest in our own business. Why is that good? Because it avoids interest charges. One of the most annoying things that we can do as a business is pay loads of interest, and we're paying enough usually on loans anyway. We do not want to be making that worse by going into overdrafts with extreme interest rates and things like that. So cash is great. We have cash. We can actually spend it today on things that we need for the business, which is fantastic. Second one is attract investment. Money attracts money. Okay, so if you already have money and the bank or investors can see that you're spending time and your own money investing in this business, they're going to trust you a lot more, which is really, really handy. And it's something that I don't think a lot of business sort of owners really take the time to think about is, and you see them on Dragon's Den. Avid watcher of Dragon's Den, by the way. If you don't watch it, you should be watching it. If you're a business student, if you're a business owner, watch it, because you can see how bad other businesses and other business owners and other entrepreneurs are at selling the businesses, explaining the businesses. And they also say, don't they, that they invest in the person, and you can see a lot of that. So you can pick up little traits and stuff, hopefully, that make your own business better. And as a student, you can see how to sort of, it's like a live case study essentially. I always said, it's so much easier to see something in a live context like that. Some really good AO2 for the exam buffs out there. We'll go over the AOs and stuff. Again, I'm assuming you know what I'm talking about now. If you don't, then that's okay. We will go over them at some point. All right. So yeah, it attracts money back to us. People always feel more comfortable if you put your own money in. All right. Pay for its expenses. This is a big one. Okay, so physically be able to pay for things. It's not something that you really think of until you can't do it. So can you actually afford to pay your own bills? Can you afford to pay your staff? Can you afford to pay the heating? Can you afford to pay the electric? Whatever it is. It doesn't matter if it's massive. It could be stock or something. Everybody thinks about stock, but it's not always that. It can be something as simple as, being able to go and buy some chewing gum. If you need it, whatever you need chewing gum for, I don't know, but whatever you need that for that business, if you can't afford to pay that expenses, then you can't afford to keep that business running, essentially, can you? So keep that in mind all the time. And hopefully, as a result of all those things, then you'll make a profit. So we're not spending all that money on interest rates and things like that. We're spending it on the things we want to spend it on, and we're spending it on investing in our own business and making sure we get the right amount of cash in the business. Okay, so I'm going to do this really, really quickly. But how many ideas can you come up with? Where the cash comes into the business, where it goes out of the business. The big one here to think about is things like, revenue streams for the business, essentially. So things like selling products, rent, if you have any rent on any buildings or anything like that, any interest on your credit or anything like that you can give out to people, you can definitely class that as a revenue stream if you want. Most businesses just count it as their actual revenue stream as the products and things like that. You could get grants and things like that, government, sort of grants or from other organisations. But again, it's a range of them. What will the business have to pay cash out for? I'm sure it's very much easier for you to think about things like this. All your bills, staff wages, tax. Off the top of my head, what else is there? You've got tax, you've got staff wages, you've got stock, you've got... and it depends on what country you're in and what the expectations are of the business and of you to be what you're paying into. Because in this country, the UK, you'd be expected to be paying business rates and things like that, which you'd need to be able to pay, which is basically like a form of tax. Whereas in other countries, they might not have that, or they might have more of that. So keep that in mind when you're doing your exam prep. Keep that in mind that there are different types of businesses, different types of rules for different places. Okay, let's keep going. So, did you get them all? Did we get them all? Did I get them all? Cash sales, credit sales, owner's capital, bank loan, share capital. No, I didn't. Okay, so off the top of my head, I'm always saying that I always know everything, but off the top of my head, did we get some of them? Yeah, we did. So cash sales, credit sales is literally just allowing people to buy things on credit. Owner's capital, we can invest our own money if we want, can't we? A bank loan, we could get money from investors or the bank. Share capital, sell some shares, get the money from that. Remember, capital is money. Is so we get the money from that. Or supplier rebates. They didn't talk about grants and things like that. So I'll have an extra point for that. Outflows, all the different things we talked about. Wages, also known as salaries. We can talk about rent. We can talk about raw materials, stock, loan repayments. Drawings is a big one. Okay, so drawings is literally what the owner takes for themselves. It's like their own payment, their own wages. We call them drawings. Okay, so just keep that in mind. It's not a big one, but it's just something to keep sort of back there for when you need it. Okay, and rates and utilities, we talked about a little bit, but basically anything that they have to pay is fair play, really. Okay. So let's have a look at this then. So can customers sometimes buy goods and receive them without having to pay for them at the same time? Yes, of course they can. You know, most of this country is run on credit, which is crazy. But most of you who are watching this, you'll have things like car loans, you will have phone contracts, in which case it means that you're getting access to things without actually paying them, aren't you? Which is good in one way because it gives you access to it, but frightening in another because of how easy it is for you to access credit in this country at this moment in time. When we get to a recession, it's a little bit harder to do that, but at this moment in time, it's pretty easy. So, yeah, we can actually physically sort of receive the goods without actually paying them there and then. You also get interest-free credits and things like that. There is a big argument for never paying for anything in full if you can get interest-free credit on it. And it's purely for your cash flow, purely for your liquidity. I'm not going to go into it now because I'll come back to it in a minute, but why that would be. Be thinking about why you think that might be. Why would I give someone £1,000 for a MacBook if I didn't have to? If I didn't have to give them today, would it be better off for me to pay that £1,000 over, say, 6 months? And that can be for personal liquidity to personal cash flow or business liquidity and business cash flow. Would it be better for them or not? Have a think. If a customer bought a sofa in January 2011 for £2,000 and only paid for it in January 2012, when would the business receive the cash? So let's have a look. So if a customer bought a sofa in January 2011 for £2,000 and only paid for it in January 2012, so when would the business receive the cash? Answers on a postcard, January 2012, wouldn't they? I mean, it depends on physically when they sold it. If we're assuming that they're actually physically paying for it in 2012, but if there was kind of a repayment system, then it would be dependent on that. But they've sold it in 2011 and have no money all year until 2012. That's good because you've made a sale which you probably wouldn't have made if you had been anywhere else, because they wouldn't have had the money or the capability or the want to do it. But the problem is that from a cash flow perspective, that you're going to have to be able to run your company for for 12 months without having that cash. So you've got no money and no stock. So it's a bit hard. You need to have that cash flow ready to be able to take a brunt of that. And he says, what would happen if a business did not have enough to pay the following: employees' salary, suppliers, inland revenue, and bank loans? Now, there is a range of different things that could happen to these businesses. And the main thing that you as an examined student need to be thinking about is look at it from a range of perspectives. So you need to be thinking about your stakeholder groups now. So remember, to answer a stakeholder question, you've got to be looking at what the stakeholders want, their aims and objectives of that stakeholder. So you should already know these by now, but if we think about a couple of them, like customers want the best deal they can get, the cheapest price with the best quality. Okay, and what do owners want? Owners want the most profit they can do, because then they can get the most. So essentially, the most revenue, because then they make the most profit. What do shareholders want? Well, shareholders want the best return on their investment, don't they? Which means that they want essentially the company to do the best it can to efficiently be able to give them a return. Okay, now be thinking about all these different things, and there's the other ones, the government and community and the media or whatever it is that you want to talk about in terms of stakeholders. But ultimately, the way that you confidently answer a question on stakeholders and things like this, you need to know what your stakeholders want, because that's going to massively impact on their response to you if you were or were not to do something. So let's have a look. It says, what would happen if a business did not have enough to pay the following? Employee salary. Right. Think about it from the employee's perspective. What does an employee want? An employee wants a decent wage, the most they can have. But they also want things like job security. If you don't pay your staff, think about yourself. Would you go to work for free? This is a difficult one for me at the minute, isn't it? Think about it from my perspective. Would I go to work for free? Would I go to work? Well, I suppose I am at work technically here with you, aren't I? And at this moment in time, it's Sunday at 9:22 at night, which I usually wouldn't have been working at. I usually would be watching Better Call Saul or whatever it is and getting ready for the next day, ready for Monday morning. But as I am going to be here with you on Monday morning, I can kind of say I'm at work, can't I? This is my new work. Woo! What an interesting time we live in. Now, the question is, would you go to work for free? And the answer is no, isn't it? So if my employer, and it's really important at this moment in time, let's have a think about your AO2. AO2 is application. Let's apply it to the situation that we're in, okay? Have a think about what's happening. If you're with me on what's the date today? 22nd? I think it's the 22nd of March 2020, in the midst of the coronavirus outbreak. I'm not smiling that, by the way, because I'm happy about it. It's just because it's so crazy the times we're living in, isn't it? So it's just crazy to think that I'm actually talking to you through this because the fact we have to socially distance. You never know, everything might get worse. Oh God, I'll get something like that. But hopefully it won't. Okay. Now, all these people around the country, and you saw Boris Johnson the other day, or maybe you didn't, but he was talking about, and the Chancellor, Rishi, was talking about the current state of the economy, current state of businesses, and businesses were laying people off or potentially laying people off because they wouldn't have access to cash. And the Chancellor said, right, what we're going to do is we're going to give people access to cash, because if they can't pay you at the end of the month, they've got two options, haven't they? They can either get rid of you and then hopefully pay you whatever they can and then get rid of you, or close. That's your two options. You're not just going to be able to pay. You can't keep a company running, realistically running, by not paying the staff, because you're going to, and not only that, but first thing I would do if my company couldn't pay me is I'd be on Indeed, I'd be looking in the newspaper, I'd be out and about trying to find out, I'd be ringing people trying to find out a new job. And I promise you I would have a new job within a week of doing that, because I don't care if I had to take a pay cut. Taking a pay cut's better than having no money at all, because it completely destroys the trust between us. So think about the effects of that. It has long affecting effects, essentially, that, doesn't it? Long-reaching effects, because you've got, not only am I upset with them now, but also I might leave the job, but also might tell other people about that, and the fact, well, yeah, they don't even pay you there. So all over the internet, have you ever gone on the internet and talked about something positive? Probably not. So go on there, tell everyone all really, really bad things about the company. So you're potentially losing future goodwill at the same time, which is strange to think about, really, isn't it? But you're actually screwing over the company now by withdrawing your labour because you feel like they've screwed you over, and then secondly, you're actually screwing them in the future because you're making sure that in the future that people don't want to come and work for them, as they know that it's not necessarily a brilliant place to work, because they don't even pay their staff. Suppliers, again, it's about that relationship and the expectation on you. If you can't pay your supplier, then it depends on the cash flow for their company, of course, and the effects on them. But realistically, they're not going to give you anywhere near as good credit options in the future if you screw them on things like this. And it's annoying. Small business owners, back me up with this one. It is really annoying when people don't pay you what they owe you. Okay? it can be the end of your business, essentially. So it can have a ripple effect as well. This person doesn't pay, this person doesn't pay, this person, so therefore it ends up with no one getting paid, or ultimately the person at the end of the line who's thinking, oh, well, it's only another week, it's only another week. Well, try that with you then. If I was to say to you, you've done loads of work for me, you come to work for me, and I say, oh, it's only an extra week, I'll pay you every 5th week. No, stuff that. I'm not doing that. No, you can't just decide that I'm going to get paid after the fact. That's not fair. So be thinking about it. So you've got your credit terms, you've also got your loss of goodwill and things like that. The relationship that you've built up, you might need to rely on suppliers in the future. I know at the minute a lot of suppliers are actually giving people the opportunity to pay after the fact because they might not be able to sell the goods at the minute because they're shutting down stuff. Weird time to be talking about cash flow because it's so poignant at this moment in time. Third one's inland revenue and tax. If you don't pay your tax, you're probably going to prison. All right. So, and you can be criminally charged by tax evasion. It doesn't matter if it's within a business. If you are the business owner, if you are keep that squarely in your mind when you are becoming a business owner. If you're trying to do over the tax man, it is not a sensible thing to do. There are ways of doing over the tax man, don't get me wrong. There are, people do it legally. Google, Amazon, which is crazy, isn't it? Because I'm on YouTube, they're probably going to take this down now. But yeah, they did, and that's not libel or libelous. That's officially noted stuff that the BBC reported that they hadn't been paying enough tax. That is the legal way of essentially paying the correct amount of tax. That's the problem with the system. But if you or I do it, if we tried to screw over the system and try to screw over the tax man, then you can guarantee that not only would we be getting hefty fines, but potentially prison time. So be very careful, okay? You heard it here first. Mr. Businessman says do not screw the tax man because he will screw you harder back. I would get that on a t-shirt, but it sounds a bit weird. And bank loans. What would happen if you get a bank loan? Well, they can pull it in. They can make sure that they ask for it back, and you have to give it them. So it's none of these are good. None of them are going to be good effects to your business if you can't afford to pay them. But anyway, we've talked enough about it. Let's just talk about two more things before we actually look at a cash flow forecast. All right. So first of all, cash flow isn't profit. Remember that. I keep telling you, revenue isn't profit. Cash flow isn't profit. Cash isn't profit. Profit is profit, but what is profit? Profit is the money that's left after you've paid all your costs off. So it's the money from revenue that's left after you've paid all your costs. It's really important to remember that, because if you can keep thinking, well, is this profit? If it was profit, we'd call it profit. We wouldn't have a special name for it like cash flow, would we? So profit calculates the difference between revenue and costs. Cash flow shows the timing of when cash comes in and out of the business. You can't calculate profit from a cash flow forecast. And I promise you, someone watching this video will try and do that in an exam. In an exam situation, you will freak out and you will try and figure out profit from it, and you will talk absolute nonsense about why that's important and why you can actually do it. You can't. Okay, so just all right. Word to the wise. Right, here it is. This is a cash flow forecast in all its majesty. This is what one looks like, and we're going to have a little look through it together now. Okay, so if you need to stop at any time, if you need to pause the video or anything like that to have a look at this, totally fine. Come back to this if you need to do some practice on it. Okay, so number one, let's sort of take this apart. Okay, so the first bit is, if you look right to the top, we've got sales receipts. Okay, so sales receipts is right at the top. Sort of what would it be? There, yeah. I'm just thinking I'm sort of mirror imaged on there. Yeah. So sales receipts, it says at the top. Now on here, that's all that we've got. So that's all the income we've got is sales receipts. So income is right at the top. Sales receipts we've got, and this is a 6-month one, as you can see, January to June. 2,500 coming in every month, except so 2,500, 2,000, 2,000, 2,500, 3,000, 4,500. So it's not consistent. All right, keep that held there for me. Now, everything below that on the second section is your outgoings. Okay, food purchases, cooking equipment, furniture, staff wages, heating and lighting, rent, telephone, insurance, advertising, business rates, drawings, total payments. Now, I don't just want to sit here and read to you, so I'm not going to go through all of them. And you can, what I'd like you to do now is stop the video. So I'm just going to give you a second, stop the video and have a go at just getting to grips with those ideas. Just make sure you can understand it. Just have a look at it, all right? So I'm just going to give you a second. Okay, you back? Great. So hopefully you've had a chance to have a little look at understanding what is actually on there and what the listing involved, okay? Now, so we've got the top total receipts, we've got total payments, so in and out. Now, at the bottom, if you remember, I told you that the cash flow forecasts were to do with 3 parts: income, outgoings, and balance. So the bottom one, let's have a look at the bottom one. This is the actual cash flow sort of section of it, if that makes sense. So the bottom, which is there. Yeah, I'm going to get good at this, aren't I? I'm going to get good at this. The fact that that's where it is. Let's have a look at the 3 things. So I'm going to draw your attention to opening balance first. Now, your opening balance is whatever you started the month with. So I'm going to tell you for this that we started this with 20,000. Okay, so 20,000 in the bank. So we'll start off with 20,000. We put 20,000 in the opening balance to start with. Okay, now the closing balance is what happened at the end of the month. So whatever happened during, we've not talked about, but we've got what happened at the start of the month and what happened at the end of the month. Okay, now thirdly is your net cash flow. Now, if you remember, if you've studied business at all and you understand the idea about net, or if you've got paid regularly and you talk about net income, it's the money that you've got after everything else has been paid off it. So it's basically, in this case, we've got opening, which is at the start of the month. We've got the net, which is during the month, and we've got the closing, which is the end of the month. Okay, so what did we start with? What happened, and what did we end with? Okay, so it goes, in this case, it goes middle, top. That's the wrong way again. Middle, top, bottom. Okay, in that order. So we started off with 20,000. Now we'd have to have a look. Right, okay, so what have we actually done this month? Well, if you can see, we started with 2,500, and then we spent 16,920. So it was an expensive month. Remember, we started with 20,000 though, okay? So we'd start with our 20,000. We'd look at what our net cash flow was. Now, net cash flow on this, we'd have something like, remember off the top of my head this, because as I said, I'm not really as prepared as I should be, but I will get better. Is the so 20,000 minus the 16 or 17, so that gives us about 3. We've got about 5.5 grand left, give or take, approximately. Okay, so a closing balance would be about 5.5 grand. Now, so started with 20. What happened in the net cash flow? Well, actually, we spent 16,920 minus 2,500. So we spent 14,420. Is that right? 14,420. Yeah, about right. We spent about that. Yeah, we spent about 14,420, and then we take that off. So yeah, we're looking at about 5.5, 6 left. Closing balance of sort of 5.5, 6. Well, I'll check these numbers in a minute with you. That 5.5 grand becomes the next month's opening balance. Okay, so it's important to remember that. So this one here becomes this one. Okay, so this here becomes this. So we start here, what happened during the month. We then write it here, what happened at the end of the month, therefore, and then that becomes this one. And then we do it again. So what did we start with? We started with 5.5 grand. What happened? Well, we made 2 grand, but we spent 4. Okay, so that's minus 2 grand. So whatever we started with, we then minus 2 grand off it. That'll become our closing balance. Now, the closing balance becomes the next month's opening balance, because essentially it's what happened at the end of the month and what at the start of the month is always the same, because it's like if you were to say this is at the second, literally no time, like a snapshot in time, and the front and the end of this one and the start of this one was at the same time. Okay, so I'm going to show you it in context now. Okay, so this is just an example. I hope it makes sense. If it doesn't, as I said, I hope it'll make sense in a second to you. So look at this one, right? We've got our inflows, we've got our outflows, we've got our net cash flow, opening balance and closing balance. So it's in a slightly different order. So let's have a look. So we started with, and another thing is, if you want to ever say minus on one of these documents, financial documents in general tend to use this, but definitely on a cash flow and income statement. We'll be talking about income statements in the next one, but cash flows use brackets to show negatives. So that's why these are in brackets. So if it makes sense to you. Okay. So we start with our cash flow. We have £9,000. What happened? Well, we actually spent 9,750. So we actually spent minus essentially 750. We spent 750 more than we made. What did we start with though? We started with 500. So 500 minus 750 leaves us with a total of minus 250. Now the minus 250 becomes the next month's opening balance. So we started with minus 250. What happened this month? Well, we started with our minus 250. We had 9,900 inflow. We had a total cash outflow of 9,750, which meant we made 150 quid, which is good. So we put that in our net cash flow here. And then we say, right, 250 minus or plus 150, in this case it's plus it, isn't it? Gives us minus 100. Can you see how it works? And let's do one more. So we've got our July to September. We've got 10,890. We spent 10,250, which when you take them off gives us a positive 640. We started with minus 100. We add or subtract the 640. In this case, it's add, and that leaves us with a positive 540. So I hope that makes sense. Let's just do it one more time. We start with 500. We look at what actually happened this month. Well, what happened this month is we made 9,000. We spent 9,750. That gives us minus 750. We started with 500. We take off the 750. That gives us minus 250. Minus 250 becomes the next month's opening balance. We start with minus 250. Minus 250. What did we make? We made £9,900. What did we spend? We spent 9,750. So that means we made money or we spent money. Well, we made money, 150 quid. We add or subtract that to the 250. That gives us minus 100 still. And then we do it again. Okay. That is a cash flow forecast in essence. There's really no need to go into much more detail than that, because for this moment in time, especially for you A-level students out there who are looking to do your, especially your first year students, there is no need to go into more depth. So let's not overdo it, because we're only trying to do what we need to do for the exam. Now, I will try and tell you some tidbits, and I will try and tell you some stuff that will be useful about business anyway, but I really want to focus down in this time of self-isolation and stuff like that and social distancing. I think it's really important that we don't forget why we're doing this. The really important thing to remember is the exam is coming. Hopefully you're not just doing it for the exam, though. Hopefully you've got an interest in business. It is interesting. It is actually an interesting subject. So let's keep going. Couple more things to talk about before we finish, all right? And I know I've been going on a while, so as I said, you can put me on in the background of things. That's my plan. As I said, I wouldn't ever say that unless you've got the workbooks and you're sitting here actually going through stuff, then you might just want to put me on in the background, kind of like a podcast kind of thing, unless you want to look at me like this. It's good, this, by the way, isn't it? I've done all this myself. I've whipped it out the other day. It was quite an easy process. But anyway, so cash flow and liquidity, what are they? So what do you understand by the word liquidity? You might not have heard of liquidity. Liquidity is basically how easy is it to get your assets into physical cash. So what is your assets in physical sort of stuff? So your fixed assets, your stuff that's actually items, stock, computers, whatever it is, and your liquidity is how much of that do you actually have access to in cash. So actual physical money. How easy is it for you to actually access cash? That's the liquidity for the money, for the business. So some people say, well, sometimes you just do it for liquidity. I say it. I was looking at mortgage things recently, and I was saying, well, because of this coronavirus, they've said you could potentially have 3 months off your mortgage if you want. And that's good, because I can afford to pay my mortgage, and being a teacher, we're in a really strong position because we're going to get paid. So that's something that we can feel confident about. But there's a lot of people that can't. But for me, even if I can afford my mortgage, is it not worth me taking that 3 month holiday? Not because it's going to do me any better within money, because essentially it's going to cost me the same in the long run. But is it not better to do that, because then I've got it cost me about £700 a month, my mortgage, so 7, 14, 21, just over £2,000 to put in my bank account, which means that I've then got £2,500 to play with as a bit of a fallback. If I want to buy something, I've got that £2,000. It's still going to be the same £2,000 I would have had. I've still got to pay the mortgage the same amount of money, but for liquidity's sake, it's worth doing. All right. Always tell my students, don't get yourself crazy amounts of money on mortgages and things like that. It's really important that you don't do that. Lots of people mortgage themselves up to the eyeballs, and then they can't pay for things because they don't think about the liquidity. They don't think about the cash flow. They think about, can I afford to do this? Well, technically you can, but it doesn't mean that you will have any standard of life. It doesn't mean that you can go to the cinema, which I know is closed at the minute. It doesn't mean that you can go to the hairdresser, which I know is closed at the minute. It doesn't mean that you can go out to the pub when you want, which I know is closed at the minute. It doesn't, in the average day, it means that you're going to be spending a hell of a lot of time in your very, very fancy, probably poorly sort of put together, or rather poorly furnished, shall we say, a house, because you won't have enough money to actually buy anything for the house, because you're spending all the money on your mortgage. So keep it in mind. Okay, another one. That seems to be my little catchphrase for the day. Keep it in mind, doesn't it? I don't usually say that enough. I usually say this as much as I'm doing today. So hopefully it won't become a catchphrase. I should have that on a t-shirt if I do. So that's liquidity. Liquidity is physical access to cash. Okay, so it's how easy is it for you to access cash? How easy is it for you to turn your stock, your stuff into cash? How much money do you actually have access to at this moment in time? Or is your money all tied up in something like a house, like a mortgage, something like that? Might be fantastic to have a £300,000 house, but you won't be able to go to the shop and go to Frankie and Benny's because you have no money. Wait a minute, I have a £300,000 house, so how does that work? It works because you've tied all your money up in stock. You've tied up all your money in assets. So that means that your cash flow is very poor. And it means that your liquidity is very, very poor at that point. So keep telling yourself that. And when you come into that, keep that straight in the front of your mind at that point of when you're deciding what house to buy. Not only can I afford it, but what's this going to do to my liquidity? What's it going to do to my cash flow? What do you understand by the term working capital as well? Now, working capital is basically the money that we have to spend day to day to be able to run the business. So I'm not going to get technical with you at this moment in time of how you work it out and stuff like that, but working capital is basically the money that we have day to day to spend on things which we need to run the business. Okay, so that's the best way to describe it, I think. So I'll show you some definitions now, okay? So liquidity is the measure of availability of working capital. So like I said, it's your access to cash. And if there's a liquidity problem, it means that we'll have a problem meeting all other immediate or future expenditure demands. So they don't have enough finance available to pay all the bills. Now we're using finance. They don't have enough cash is better. They don't have enough cash to pay the bills. They don't have enough cash, physical cash. They might have money, they might have stuff tied up in stock, tied up in asset, but that's worthless at this moment in time, because I don't care if you've got £12 million worth of stock, B&Q, for example, crazy company in terms of cash flow, and liquidity, it's insane the amount of money that they tie up in it. Think about what B&Q did, and I heard recently that B&Q had actually started to sell some of their space or rent their space out. Another form of we can put that on the cash flow forecast as an income for B&Q at that point. So sales of whatever it is that they're selling at B&Q at this moment in time, but also the rental of any space. But think about B&Q, right? Let's just take a moment, and they've got this massive warehouse, aren't they? All over the place, absolutely huge warehouses. And it's useful because they've got a hell of a lot of stock. Now, is it sensible? Is it required? Is it necessary to have that much stock? And the answer's a bit more difficult than that, isn't it? Because it's hard to say, is that the USP? Is that the unique selling point? Is the fact that you can go in there and pretty much get whatever you want? But look at someone who's the main competitor like Screwfix. They don't do that. They'll get you the stuff quickly. They keep the main stuff in stock. If you're into Screwfix, you might not yet, but when you do, it's great. But when you go into Screwfix, they'll say like, I'm looking for this, these bulbs. I'm looking for this thing that I want to do my DIY with. And they'll go, all right, okay, we've got that, and that. And most of the time, the main things that you'll want, they've got in stock, and they'll actually just go and get it for you. But on the off chance they don't have it in, they'll just order it for you and it'll come next day. It's great. Literally, do you really need something that urgent? If you do, go to B&Q because you'll pay a massive premium for it. You'll pay 3 times as much a lot of the time. Not necessarily from Screwfix. I'm just paraphrasing. I don't know that to be a fact, but ultimately I found them to be B&Q's usually more expensive because of the convenience factor, because of the fact that, look, the bloody difference in size of company. Screwfix is this little thing. They can put them in the middle of nowhere. You'll travel to them. They're usually on little industrial estates. And then look at B&Q, these massive warehouses, usually in quite desirable locations with literally hundreds of thousands of pounds tied up in stock, and that's one. Think about company as in the company in general. The amount of money, the liquidity of B&Q must be crazy low. It must be. I mean, it might be different because B&Q is quite a big company, but think about it. It does not make any sense to keep that much stock because you've got to count it, you've got to insure it, you've got to make sure it's not stolen, you've got to make sure it's not perishable, you've got to make sure that it doesn't get damaged. There's all these different things that you've got to think about having so much stock. So this is sort of coming back to earlier on in the spec when we're talking about stock control and things like that. But as I said, we will come back to that. But is that a sensible thing to do? You'll have to make your own decision on that. You might think it's a USP. In which case, if you can argue it in the exam, AO3 and your AO4 points in terms of, well, actually, although it doesn't seem that sensible, B&Q's main USP is based on the fact that it's a convenience store and the fact that most tradespeople won't be buying from them, so they don't really have to worry about them. They're going for more of a different audience, more of a sort of a niche market. No, sorry, not a niche market, for a very, very mass market approach to DIY. You see what I mean? You can kind of argue it, and that's what's brilliant about business studies is the fact you can argue your case. There isn't a correct answer a lot of the time. A lot of it's open to your justification, especially in those 20-25 mark evaluation questions, something like that, the crazy questions at the end. So when businesses are discussing cash, they're also discussing the liquidity, okay? So this is important that businesses do not always need to keep enough immediate cash on hand to meet likely future expenditures. So they don't always need to keep the cash. We just draw your attention back to that. We're not saying to keep millions of pounds worth of cash all the time. We're not saying that B&Q is a bad company. We're saying that they're a very successful company, but I think in terms of efficiency of liquidity, there's a lot to be desired, isn't there? Because they have a hell of a lot of stock. And that cannot be sensible. There's loads of stuff they must have for years in that shop, and they've got to keep turning it over, and some stuff will be perishable, and the like. I can't see that being sensible, and yet they are a very successful company. However, they must keep enough liquid assets available to effectively manage manage the cash flow. So we don't need loads of money, but we do need enough money to be able to pay our bills today, and we do need enough money to be able to pay our bills tomorrow, whatever they may be. Okay. So we're coming up to the end of the first sort of video in terms of the actual content. And I'm going to do a little bit of an extra thing, and this is basically just for me to try it, really, just to see if it works, ready for the stream in the morning. We're going to be looking at the next pack, which I'm pretty sure is income statements tomorrow. I'm going to have a look at that straight after this. But cash flow forecasts are only a prediction. It's really important to remember that. Students ask me all the time, how does that work then? Because it's just a prediction. Yeah, but most things are. Okay, so most things that we do in business, there's no way of knowing. We don't have a magic, crystal ball that we can look into. If we did, it'd be fantastic and we'd be the most successful business people ever. But a hell of a lot of internal, external things affect businesses. So let's have a think about internal factors. Okay, so internal factors are things which we have control of usually, and they're inside the business. So things like absenteeism rates, things like staff turnover. Okay, you could say we don't really have control over them, but it's usually an effect of what you are doing as a business, your management style or your HR practice and things like that. You do have some control over it. They're not just randomly doing it. I know that coronavirus has kind of thrown a spanner in the works in terms of that, but we're not talking about that. Don't use coronavirus as an example in your exam. Okay, so usually we have control over them. Other things that we sort of have control over is your own decision making processes, your product decisions, the fact of how much money that you put in different things. What is your HR policy? Are you really hard on people? Are you being nice to people? Are you investing a lot in sort of training? Are you investing loads of money? All of that, whatever you're doing with your money inside the business, that can cause liquidity problems. Of course it can, but you have control over it to an extent. As I said, some people could argue that you don't because you would need to do that thing. And that's where that AO3 explaining an AO4 evaluating thing comes into your exam answers, because you're talking more about what your opinion is of it and why this might not actually be the case. It's not as straightforward as that. That's what a good business person, a good business student can do, is look at a situation, they can analyse it, but they can also talk about the caveats of it and what the issues, what potential issues are there and things like that. Now, so in terms of internal factors, there's a hell of a lot of different things, but basically anything that you've decided to do with your money internally to this business can really have a massive effect on, your cash flow. Because if you decide to go do what Google do and put, really go mental on the sort of trying to make people happy at work and things like that, put a slide in your office like they've done. If you're interested in that, go on Google or YouTube and Google offices and have a look at their offices, because they have all sorts of big fish tanks, board games, whatever it is that you want to do instead of doing any work. Although they do manage to get work done. Interesting. And but if you decide to put that slide in, let's say you could spend 10 grand on a slide for your office, right? And you thought that was really useful. Now you've not got 10 grand. Now your 10 grand is stuck in that asset. And realistically, you're not going to be paying that. You're not going to be able to sort of sell that on again, are you? So that slide has cost you 10 grand, but you might have needed that 10 grand to do something else. Okay, so the internal ones are not less damaging, but they are potentially easier to control because they are usually as a direct result from your own actions. Now, if you look at the external factors, things like the coronavirus, like interest rates, like inflation rates, like coming out the EU, don't get me started on it, like sort of relationships with people, like suppliers going under, like current competitor actions, like the government's stance on things as well. It can be anything. It could be the stance on tax. If you have a Labour government versus a Conservative government, you will have completely different tax rates. Some are harsher on tax, some are nicer on tax. All those different things you can't control. You can control the government in the sense of that you can vote for them, but if you are really happy with the government that you got in and it's really suiting you well, when the next government get in, there's different economic policy, that will dictate how well your cash flow is doing and how well your business is doing. So it's not easy to maintain a cash flow. It's not easy to maintain liquidity. It's a fallacy to think it is, and it shows a lack of understanding of what liquidity is if you think it's dead easy. Some businesses find it easier than others, of course. The bigger businesses will have more access to cash because they could potentially get loans out. They could potentially get money from investors. They could potentially get money from other things. But all businesses are going to really struggle with liquidity. It's always a problem. And these are just things that you need to keep in mind when you're talking about your cash flow. All right. So a couple of things here: cause, effect, solutions. If you can pause it, have a look at these. I'm not going to go through each one. But the main thing that you need to be thinking about for your AO3, AO4 is your AO3 chains and your AO4. So what is your cause, what is the effect, and what is the solution? Be a nice bit of AO3, a nice little bit of AO4 if you can do it. Or if you know that you're not very good at AO3, why not do an AO3 chain? So what's the cause? It's a new business. If it's a new business, it has an accurate cash flow forecast. If we have an accurate cash flow forecast, the likelihood thing is going to be that we're going to make mistakes. If we make mistakes, then we're likely to spend money on things that we don't need to. If we do that, then it's likely to end up like this. Okay, that's a really good AO3 chain. I know some of my students struggle with explaining and accurately getting AO3 marks. If that's you, practice it. AO3 after AO3 after AO3 after AO3. Now, don't do it in the exam as much as that because it's too much. But ultimately, if you can show that you can do it, if you can show that there's a chain, if you show that that you know that, then it's going to be much easier for you to access those marks. So as I said, I'm going to leave that. You can have a look at that. You can pause it. You can have a look at it. Okay. And a couple of others. Okay, so cash flow sort of solutions. Businesses must be aware of the possible solutions to their cash flow problems. So we could increase revenue or reduce costs. We know that's a nice way of being able to get access to more cash. Okay, same thing as be able to improve profits. Really, we've got two options, haven't we? We've got increase revenue or reduce costs. With this, the main thing that you need to be thinking about is there any other ways of doing it? Well, we could increase revenue if it was as simple as that. Everyone would do it. So let's not say like it's really, really simple, but we could potentially increase revenue. Think of a new revenue stream, something like that. We could reduce costs, look for cheaper suppliers, look for an alternative supplier of raw materials, whatever it is. We could look at new technology, efficiencies, capacity utilization. We could potentially look at those things. We could delay creditor payments. We could ask them, and this is why it was so important to keep those creditors happy. Remember, creditors credit to you. It's always from your perspective. I always got confused with that. I always think, oh, well, creditors are someone we owe money to. No, creditors are people who owe you money. So we can delay payments to our creditors if they'll allow us to do it, and that's why it's so important to keep them on our good side. We don't want to screw them over with liquidity issues by going, oh no, we can't pay our bills this month. They're more likely to in the future say, well, actually, you're not getting any credit. Your trade credit is being cut this time. We don't want that. Final one is extra funding. Where could we get that from? Like we said, a couple of ones. Government, potentially. Owner, potentially. Investors, potentially. Share capital, potentially, depending on the circumstance. And the circumstance, remember, comes back to AO4. Keep telling me what the circumstances are. It's good that. So, again, we would have done this in class. We would have gone in, ways of achieving it, delay payments, ways of achieving criticism and things like that. You need to be able to do this. Again, I'm not going to go through in loads of detail now because it's probably unnecessary. Okay, so let's just have a look at this one. It says this. Let's have a look at the two. I'll just delete that. Okay, and I'll delete this one as well. Benefits of it. So allows a firm to get a clear idea in the likely future cash flow. Remember, a good AO4 point on this is you have to look at who's actually doing the cash flow. Is there any vested interest from that cash flow person who's doing the cash flow to make this look better than it really is? Are you trying to hide something or anything like that? Not necessarily to do anything illegal, but you might be trying to impress someone. You might be trying to impress your manager. You might be trying to impress investors. You might be trying to do something that's not good. Identify when the business may need additional funding, such as when the cash outflow exceeds inflow. This will be seasonal for a lot of companies. Look at different times of the year. Okay, so when we go, all right, well, we're an ice cream business, so we're probably looking at a July and August. We're going to do fantastically well. Now, there might be times in the year when we actually do really well, despite it being really bad weather. There might be something that comes out the World Health Organization that says ice cream's really good for you, or a brand new movie that comes out and there's a trend or something that really makes a difference. But for the average ice cream man, ice cream company, ice cream manufacturer, they need to be thinking of the seasonality, which is reasonable to think is going to happen. When in the year are you going to be busier? When in the year are you not? So you can look at, right, well, if we need to be able to buy more ice cream, produce more ice cream in July and August, well, we'll need to actually buy it slightly earlier. Okay, so let's make sure we've got an extra 500 grand available to pay walls at the start of June to make sure we've got enough ice cream ready for July. So can you see what I'm doing? Whereas with other companies, they might go, look about massively seasonal companies like Mrs. Christmas, those little weird shops that you see that have, Christmas trees in and stuff like that. Massive 6-foot Santas that look terrifying. Stuff of nightmares, that. And we used to have one, just tell you a little story, we used to have one in my nan's, and we had this little Christmas tree. You might have seen one. They're like about that big, and it's a Christmas tree, green Christmas tree, and it's got eyes. It's got like really weird cartoony eyes and a mouth that sort of flaps open like that. And most of the time, it's like jingle bells, jingle all the way, right? And you could even put it on a sensor, which I don't know why anybody came up with that. It's a crazy idea, but you're walking past and it goes jingle bells, and it's a nice little thing. All right, you would think, oh, jingle bells, yeah, think of it. But it was battery powered, which again is a weird thing to do. And what happened was when the batteries were dying, it would slowly degrade, which was terrifying. And we used to put it places to freak people out. So instead of being jingle bells, it would be jingle bells, and then it'd get worse to a like that until it was just like really terrifying stuff. And we used to leave it in my nan's house so that when she'd go in the back room, it'd freak her out. And I think they're the best type of pranks, aren't they? It's like when you leave a pillow on top of a door, and you might not be there. You might never see the outcome of that prank, but that's okay because you knew that one day would be would freak someone out. I like pranks like that. Anyway, let's go back to what we were talking about. When there is predicted to be a large positive cash flow, businesses can plan ahead on how to use the money, such as paying off debts. If we know we're in a really good position, we will be able to pay it off later on this month or this year, so don't worry, we'll be good. An accurate cash flow forecast will allow a firm to get a clear idea of where the business is going and how it's doing. Is it likely to perform in the future, or is it likely to fail? Again, we don't know it, but we can make guesses, can't we? Reasonable assumptions. Inconsistencies in performance can be identified, predicted, and remedied. Can we pay our expenses? Do we need to take any action? Are we ready for this? You will find quite quickly that successful businesses do a lot of cash flow forecasting. They have complete departments, or at least a couple of people in very large companies. As I said, obviously, the bigger the company, the more people they have working on these things, working just on cash flow forecasts and cash flow and financial documents and stuff like that. It's really important to that business because potentially you might have 100,000 jobs on the line. You could have not only you, but you might be talking about hundreds of millions of pounds and things like that. Now, the other ones are limitations. They're not all good. The main thing that we're talking about was takes management time up. And remember, if you're going to employ someone to specifically do this, you're going to have to pay them a decent salary because you don't want to be putting anybody in charge of this. You need to be able to trust them. They need to be qualified. Cash flow forecasts need to be accurate and have value. Remember, if you're trying to impress someone with one, they're pretty much useless. So keep them in mind of who's doing them and, sort of why they would have. Is there any vested interest in them making this look worse or better than it was? The longer the timescale, the less accurate the forecast can be. That's why I want to keep it to a 6 month or less if you want. Remember, the more cash flow forecasting you do, the better essentially. But you just got to think about the opportunity cost of doing it too often, and is it really going to add anything to it? Internal and external factors can change and thus impact on the accuracy of figures, inflation rates, minimum wage. We talked about things like this, government changes, coronavirus, all these different things that affect it. Cash flow forecast needs to be monitored and have ongoing usefulness. It's the same as business plans. Companies make them to try and get finance when they first open. They're really good at them and they're dead passionate about it as well. If you've ever spoken to someone who's just started to do a business or is in the process of opening a business, they're so passionate about the business at that time. They're dead happy, they're dead excited about it. And then what do they do with the business plan? They put it in the cupboard, in the desk drawer, and then they never look at it again. So the aims and objectives, I don't know. Are we all singing from the same hymn sheet? I don't know. Same as cash flow. If we're not actually checking it out, if we're not actually looking at it, there's no point of having it. Couple of things for you to fill in here. Again, feel free to pause it. Feel free to have them in. Again, a couple of little different things for you to do. As I said, I'm just trying to get the main crux of it out. Final one, and I don't know if you can see this, but you can have a go at the ones that you can see. As I said, I can see that it's not all perfect, but Cash inflows at the top, we've got sales revenue, we've got loans, and we've got total receipts. So in this one, we've got two different types. We've got two kinds of inflows. We've got sales revenue and loans. Total receipts, we've got all the different ones all the way down to total payments. And we've got, opening bank balance, net cash flow, and closing bank balance. So again, what did we start with? Well, on this it says we started with 3,000. What happened during? Just as a quick one, we made £4,500. We spent 4,650, which means that we spent £150. So our net cash flow would be minus 150 in brackets. That would mean that our 3,000 would go down to 2,850. So closing balance would be 2,850 if I'm doing that right off the top of my head. I'm pretty sure it is. The 2,850 would then go to the new opening balance of the next month, and you would repeat the process again and again and again. So that, ladies and gents, is cash flow. Okay, so I hope that's been useful to you, and I know it might be a little bit rambly at this stage. Please forgive me, because I'm still getting used to being able to talk to a camera like this consistently, and I'm not sure how long this has been going on for, but it seems like we've been talking for a long time. So there's only one thing else I want to do today, again, really mainly to test my system and make sure that it works to the best that I want it to. But I thought what we could do is on the streams is have a look at the news as well, because one thing that students don't do is they don't read the news, they don't look at the news, they don't listen to podcasts of the news and things like that. And now in this time of viruses and things like that, you might be watching the news a bit more, but I bet a hell of a lot of people watching this haven't watched the news, aren't looking at the news enough, aren't spending enough time actually listening to what the official stuff is, and it means that your business sense is way off. That's one of the most important things an entrepreneur can have, is good business sense. And good business sense, what I mean by that is actually being able to use the gut feeling to be able to make decisions based on their innate knowledge, their understanding, not only their innate knowledge, but their massive knowledge of their the surroundings and the global economy and the current economy and whatever markets they're working in, the product groups. It's really important that you really understand what the hell you're talking about. And the only way we're going to know that, or I say that, to an extent, is currently at the news. So let's have a little look at the news. So this is BBC News. I thought we'd have a quick look through it and see what's what. So today we've got Germany bans groups of more than two to curb virus. This is a big one, obviously in world sort of news at the minute, is this coronavirus and how it's affecting people. But businesses are going on under left, right, and centre. The interesting thing to me will be what the government do after this all changes, because all right, it's going to affect you. It's been affecting people's educations. It's affecting people's businesses. But what happens when it's passed? What happens when we still have to pay bills in a year's time? What happens when we have to, make the money back? Because we're going to have to. Do you remember austerity? It's coming back. I know that I'm not saying this is a bad thing. I'm not saying that we don't need it. I'm not saying that. We do need it currently at this point, I think. There's no other way of doing it. We need to protect jobs. But if you thought the old austerity was bad, then wait till this kicks in. So let's have a look. It says Primark UK stores closing until further notice. Let's have a look at this. Primark UK stores closing. 189 UK stores have closed until further notice. It says demand drops due to social distancing. Remember I talked about external impact, external factors. That would be a really good example of it. It's already shut stores elsewhere and wanted to protect the health of employees and customers. Of course it did. I'm really cynical, by the way. You'll learn this more about me as long as we spend more time together. You'll learn that I'm really cynical about businesses, and I think that they're just doing it for money. They've already shut it. Wanted to protect the health of employees and customers. Well, why are you talking about demand dropping then? Because I think that's really why they're doing it. Other high street retailers such as John Lewis and Timpson have already announced store closures among the pandemic. Yeah, because how many people are going to be going to Timpson's? It's not like you're going to really need some keys making, is it? When you're worried that you might need a ventilator within the next couple of weeks. A Primark spokesperson said that any staff affected from bar closure would receive full pay for their contracted hours for 14 days. Wow. Think about that, right? Primark, and this is hidden in a tiny little bit here. Primark have said that staff affected by store closures, 189 UK store closures. Anyone who's affected by it, I think there's going to be few people who aren't affected by that, will receive full pay for their contracted hours for 14 days, for 2 weeks. So you're not even getting a full pay packet. When's it going to open again? It's going to close, as it said. We hope it won't be for too long. All of our wonderful colleagues will remain on full pay. Well, what is this one? Oh, Timpson. This is better, isn't it? We are temporarily closing 2,150 shops, and it's going into hibernation. We hope it won't be for too long. All our wonderful colleagues will remain on full pay, and we look forward to seeing you when we reopen. That's better. Thank you, Mr. James Timpson, everyone. But look at Primark. Wow. I mean, come on. And then we've got things like this already. The rough sleepers who can't self-isolate. An interesting thing that we're going to have to think about, things like this. What do we do with these people? You could potentially have rough people who are, on the street who aren't able to go to the hospital. They won't know. I mean, are we saying that these people aren't worth saving? Are we saying that they shouldn't have opportunities like this? Maybe the government should be doing something about that. I mean, it's a difficult one, that, isn't it? I lost my job because of coronavirus. What happens when everyday life suddenly changes? People would rather give their mum some loo roll. That's brilliant. Let's have a look at that one. I can't help myself. Sorry. Let's have a look at this one. This looks like business has been really tough. Customers are not thinking about Mother's Day. They're thinking about the groceries at the minute. Flowers are a luxury, and they'd rather give their mum some loo roll. Interesting one. Ruth Donahue owns the flower shop in Lee, South East London. She closed her store on Monday, having only had a handful of orders for Mother's Day. We've had the worst Mother's Day I've seen in 34 years of having my shop. I pre-ordered all the flowers 2 weeks ago, but we just haven't had the customers. Everyone's saving the pennies and understandably worried about their jobs. That woman there, look at that face, right? I wish I could zoom in on it. Look at that poor business entrepreneur, poor backbone of British economy face, because what that woman's experiencing is true external factors affecting her life. That's what it is. And she's got a funny expression, I've got to say that, but it looks like it's been taken from some kind of video, because it's like, what is she doing there? Interesting sort of sort of expression to do. But yeah, she will probably go under potentially for this. We know that there are certain times. We talked about cash flow, seasonality of product. This is here and now. It's so weird that we're talking about cash flow when it's really here and now. McDonald's to close all UK restaurants. Let's have a look. I've not seen this. Previously, the fast food giant had closed its seating areas but continued to offer takeaway. McDonald's said it was the project of well-being and staff customers. Let's have a look. What's this? We've taken the difficult decision to close them all McDonald's restaurants in the UK by 7 p.m. on Monday the 23rd of March. This is not a decision we are taking lightly, but one made with the well-being and safety of our employees in mind, as well as the best interests of our customers. We would like to work with the local community groups to responsibly distribute food and drink from our restaurants. Thank you for our brilliant employees. What? I thought that... Right, this is getting out of hand now, this corona thing, isn't it? I know that we've had a lot of deaths, but come on, McDonald's is shutting. This is insane. What are people saying? Sorry, I never intended this to go this far, but I didn't expect it to... How do I look at this? It shows I don't spend any time on Twitter, does it? Great. I need to log in next time, don't I? Is there any way of looking? Replies. Wishing you well, including the drive-through. Well, great. I understand why you've chosen to do this. Probably the right decision, but I hope you made arrangements to pay your staff while you're closed. Hi Dan, all company-owned restaurants employees will receive full pay for their scheduled hours until the 5th of April. We will further support our employees to ensure that those who are eligible can fully benefit from the support packages announced by both government. Wow. So that means that in terms of what McDonald's are doing, McDonald's are saying that until the 5th of April, when's that? With the 5th of April, it's the 22nd of March. Is that like a week? 2 weeks? So they're saying for 2 weeks, 2 weeks again, this 2 weeks thing. McDonald's are saying that they're not going to, they're only going to pay people for 2 weeks for company-owned restaurants. What about franchised restaurants? As individual business owners, our franchises are set their own pay and conditions for employees guided by the UK. So what they're saying is, because McDonald's is a franchise, that they're not going to take responsibility for it either. That's bad for a lot of people. A lot of you guys, a lot of students are going to be suffering from this as well. Bloody hell, that's crazy. That's annoying as well. I've not even had my last McDonald's. I've had my last McDonald's for a good amount of time. I know you're probably thinking, yeah, you could probably do with a few less McDonald's, but that's not the point, is it? Wow. Okay. That's how are people responding to this? Let's have a look. Would have been nice if they told their staff, my sister just found out off social media she doesn't have a job now for the foreseeable with rent to pay. She's worried. She's on a 0-hour contract, so we don't know. The point is that staff haven't been told about the decisions. Having found out on social media, she's confused. Wow. So, sorry, it's just crazy that to me that I can't actually believe that that's happened. So that was 40 minutes ago. God, you get some very very up to date information with this channel, don't you, Mr. Businessman? First on the scene there. And this is another thing. I just wanted to end with this really today. How to video call your family? Give them a miss. Come on. You really need to speak to them too. Stephen Fry's tips for managing virus-based anxiety. Who's this? I hate this as well. This is just one of the pet peeves that I have. I mean, said you're gonna learn a lot more about me in the coming weeks with this. But look at him. Who's that? Try to find joy in the small things. Shut up. I'm not interested in what you think. Who is that? Let's have a look. Look who's that. You're either working from home or socially isolating or quarantining after showing possible signs. Blah, blah, blah. The joy of stitching. I've taken up a new hobby that I never thought about trying, cross-stitching and embroidery. Well, brilliant. Maddie Bateson 21. I'm really pleased for you. But why are you going on an international news site to shout about that? It's just not. It's not. It makes me sound really bad, doesn't it? I was thinking about buying a Lego set. If anybody knows any good Lego sets, by the way, if you could just leave them in the replies, in the comment section for me, because I'd be really interested. Any links to any that you think I could do? I'm thinking like a mental massive one. I'm thinking like destroying my own liquidity to be able to buy these. But you can get those crazy like 1,000-piece ones, can't you? Are you allowed to go for a walk? Yes, you are allowed to go for a walk at this moment in time. Excuse me. Last thing I want to end on before it all kicks off tomorrow is this one. Let's do this one. Oh no, wait a second. No, we'll do this one. We'll talk about the Olympics tomorrow. ITV halts Coronation Street, Emmerdale, Lorraine, loose women filming. Lorraine Kelly will join Piers Morgan in the Good Morning Britain studio from 9 till 10. ITV is suspending production from some of its most popular programmes in light of the coronavirus restrictions. Filming on Coronation Street in Emmerdale has been halted. Or well, or no, let's not. I'm devastated. Loose Women will show repeats rather than being live, and Lorraine Kelly will be in the Good Morning Britain studio instead of hosting her own show. Why does that matter? That's strange, isn't it? Why does having her in the same studio matter? I can't stand loose women. As I said, it's really annoying. If you had loose men in terms of the same show, but men, it would be very sexist. Can you imagine the uproar if that was the case? But yeah, that's just one of my pet peeves. I hate that program with a passion. I hope this is on it. In fact, it won't be because they don't have it live. So even if this Mr. Businessman became the YouTube's new smash sensation that everybody wanted to know my opinion, which is very unlikely, but if it did, it's not even like Loose Women could talk about me because it's not going to be live for a while. Ha ha. I suppose I can say whatever I want. And the decision has been made to minimise the number of staff travelling in and out of our studios and working together. Does it mention pay? ITV said it would obviously continue to review these news arrangements on a day-to-day basis. What's it saying? It's not saying. A new series called Hollyoaks Favourites will give viewers a chance to revisit some of our biggest episodes, from weddings, bust-ups, heartbreaks, and some of our biggest and best stunts. Channel 4 said in a statement. I've got to hand it to them for that. You know, at the end of the show, Antideck told fans that next week's episode, the series finale, would be pre-taped. The BBC have already halted filming on continuing dramas such as EastEnders, Casualty and Doctors, whilst Channel 4 has suspended production on its teen soap Hollyoaks. We're living in crazy times, aren't we? These are what external factors do to business. So this is going to be a reoccurring thing. I know that we're talking about cash flow, but hopefully you can see by having a look at the news, by having a look at BBC News is pretty good. I would stick to them, and they're not always the best. As I said, I was a bit naffed off with them all the last couple of months of various things that they were talking about, but they are still a reputable source that hopefully are quite separate from everything, and they do have some pretty good stuff as well, like little interesting bits as well. So we're going to hold it there anyway. We're going to hold it there for today. I will be live in less than 12 hours time, 10 o'clock Monday morning, and then from then on Monday, Tuesday, Wednesday, Thursday, Friday, until we finish the spec, which isn't that long to go, and it depends on how far we get through it, really. I hope this has been useful. If you have any comments, concerns, whatever, be gentle, all right? I'm not here for entertainment purposes, although I don't want it to be dead boring. And I'm still getting used to this whole process, so please be gentle with me while I get used to it. I hope it's been dead useful for you. So until tomorrow, I will see you then.